So you're a veteran and you've already bought a property, or you're thinking about buying a property either as a rental or selling the property subject to, and you're wondering how that's going to affect your VA entitlement if by keeping one VA in place, you're going to be able to use it again on a second property or even a third property. We're going to talk about just that today. Quick shout out to all our veterans. We appreciate and love you guys and girls for your support. Thank you for everything you do. It's truly appreciated. And if there's ever anything we can do to help pay you back, reach out anytime. We'd love to speak with you. Thank you again. All right, now let's get to the video and into the nitty-gritty on a VA loan and how we can use that to buy multiple properties, either as a primary or building your rental portfolio. And we're gonna get very specific on the details, how you can make it work. First, a couple of things you wanna consider when using your VA loan to buy multiple properties. First, you wanna make sure you're in a county that has a conforming loan limit, which is $726,000. And to make this easy, if you don't know, 90% of the counties are conforming, so you can be pretty sure, but it's still good to double check to make sure you are in a loan conforming county. And if that is the case, you can still get a second loan in many scenarios that allows you to 100% finance with a VA loan. But the loan cap amount might be different than the first time you use your entitlement by a primary property or a property that you turned into an investment property but kept the VA loan in place. I personally know veterans today that have 3 VA loans on 3 different properties. And let's go over an example to understand exactly how the numbers work. First, you're gonna wanna know your outstanding balance of the loan. In this example, let's say your VA loan balance today is $250,000, and 3 years ago, when you closed that VA loan, the balance was $275K fully financed on a VA loan. We take out the original debt of the loan, which in this case was $275,000, and we want to multiply that as a first step by 25%. And when you do that, you'll get $68,000 of an entitlement. And a quick explanation on that, you're using 25% because when you take out a VA loan, you're essentially guaranteeing the lender 25% of that loan. So in this case, you've used $68,000 of that entitlement. So that's why you see veterans who have 2, 3, or 4 VA loans outstanding. Next, we need to find out what your budget is for the next property. And again, first thing you want to do is make sure you're in a conforming loan limit county, which again, 98% of the counties in the United States are. Here in Phoenix, we're in Maricopa County, which is a conforming loan county. And the limit for that is $726,000 for conforming loan. So now we take the loan limit of conforming loans, which again is $726,000, and we also want to multiply that by 25%. And when you do that, it comes out to $181,000. And in this situation, you want to take that $181,000, which is the conforming loan limit entitlement for VA loans, and then we want to subtract that first number that we got of the used entitlement, which came out to $68,000. So we take $181,000, which is 25% of the conforming loan limit, and we subtract the amount of the loan you've used as far as your entitlement, which came out to $68,000. And when you do that, you're left with $113,000. And then you're gonna wanna take that $113,000 and now we multiply that by 4. And when you do that, you get $452,000. And that $452,000 is the entitlement remaining that you can use for your VA loan. You can finance 100% on a VA loan up to $452,000. Now, I know we're in Phoenix and prices have gone up substantially in the last few years. You can still find properties within that range, but we're gonna talk about today, like say you're looking in the 600 to 700K range and you identify a property you wanna buy that costs you $600,000. Now we're gonna go through what that means as far as using your VA loan for that property. First, you take the price of the new property, which is $600,000, and then we're gonna subtract out that $452,000, which is the entitlement remaining. And when you do that, you're left with a number of $148,000. And you're gonna take that $148,000 number and you're gonna multiply that by 25%, which is the number you're gonna be responsible to put down. So we got $148,000 times 25%, and that comes out to $37,000. So on a purchase price of $600,000, you're gonna finance at 100% the first $452,000, and then the remaining amount, you're gonna put down 25% of that number, and that's gonna come out to $37,000. So quick math in my head, I believe that's going to put you at 6% down payment for this property using the rest of your VA entitlement. Now, if you found a property that was $450,000, you'd be able to finance that 100% as a second property using your VA loan. And now the next thing becomes, can I actually afford this property? And we're going to talk about that now. And for this part, I'm not a lender, so that's the first thing I always recommend is let's put you in touch with a lender if you don't already have one. If you already have one, great. Reach out to them, have the conversation, and start to fill out the credit application and let them take it from here. And if it ends up you need to wipe out the first property, meaning you can't sell it subject to and keep the loan in your name or keep it as a rental, here's what I recommend you do in that case. With a VA loan, a lease agreement wipes out 100% of that debt to income from your ratio to be able to qualify for the next property. So that's what I recommend doing is put it out there to market for lease and get a lease in place. And you can do that whether you're renting or selling the property subject to. And that's different from selling conventional or FHA loans where they don't recognize 100% of the lease agreement. So that's a huge benefit you have of using a VA loan is they recognize 100% of that lease agreement for your debt to income ratio. And when you do that, now you have the full purchasing power using your VA loan for this next property. So that's how you do it. I hope this was helpful explaining how a VA loan works and how you can use it. I get a lot of people out there believing that it's only for one property, and that's not the case. It's really a mathematics equation. And as always, I appreciate you staying to the end. If you're looking to buy, sell, or invest in the Phoenix market and need a little help along the way with an investment savvy real estate agent, again, my contact's in the description below. And if you're interested and you like this content and want more, I come out with videos every single Saturday. Feel free to like, subscribe, comment, ring the bell, and you'll see videos like this every single Saturday from me and pertaining to the Phoenix market. If you want to know more about the best areas in the Phoenix market here in 2023 to invest in or live in, luckily I've made a video for that and you can find that here.